I just opened
Yeah,
my.
why somehow?
I
Oh,
just
your YouTube
opened.
live?
What do you say?
Your YouTube live?
Get
Oh,
my live.
oh,
Oh yeah,
oh, I see, I
I'm
see, I see.
sharing my screen right now. 1 second.
Oh, yes.
Yeah, I can do both way.
Oh, okay, 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 okay.
All right, let me share my. Let's call Noah. How about that?
I tried to add him.
Oh yeah.
I sent him the invite too. See, I think he said. Let me call him.
All right.
I'm sorry, you can't. Decline my call fast. Okay.
He might come out.
Maybe
Let's just
late.
text him, and he probably like come over later.
Okay. Oh, my trial is over. I need to buy.
Oh, your free trial.
Yeah.
Uh-huh. Discord.
It's okay. Oh no no no! Oh never mind. I still have a couple more days left. Okay. Still good. Good.
All right. So tonight, do you want to analyze first, or you want me to show you first, or
Let me look at it a
yeah,
bit.
yeah, you can look at your chart and then you can try to like analyze the market and then see. You know why I choose this time? Because right now, like from 2 to 3, usually you will get a better chance to have a swing trade. So
Mm. And then swing trade is which one is swing trade?
swing trade means like you hold it for like a half an hour or even longer, like
Oh, longer. Okay.
and also you can set the points. You can get like a 60, 70, or even over 100 points. But the scalp is just like a quick in, quick out, and
Quick
then
one.
yeah, take quick profit. Like usually be ending like in couple minutes or 10 minutes around there.
Mm. Write this down.
Wow. See, there's a rally right now.
Me.
No, usually. Oh my god. Windows. Okay.
Swing trade, and then what's the other one called?
Scalp. Scalping.
Yeah. Okay. I have my chart set up. Have my 1 minute, and then I have my long
Uh,
higher time frame.
yeah. Uh, if you check out my screen, you can see like the time frame that I usually like using, that I usually use. It's like 1
Oh,
minute, 5 minutes, 15 minutes, 1 hour, 4 hour, day, week, and months.
you actually look at the month. You can. Does it tell you a lot? The month.
The months, yes. Actually, yeah, cause I already looked the chart earlier. So for me, you saw this line, the
Mm.
4,000 459 459. This one right
Mm-hmm.
there.
Mm-hmm.
This is the
Cross.
target. I would say this will be my target. How do I find this line? Because if you open the monthly chart, you saw you remember the FVG that I mentioned before. It will be firm by 3 bars, right? And then if there is a gap between the first bar and then the third bar, we will call the FVG. You see this one? This is a good
Mm-hmm.
example.
Oh.
Yeah, let me delete this. Alright, so this is an FVG, right? Right? You
Mm-hmm.
see the first bar over here, second bar, and then third bar. The gap should be between the first one and then the third one. There should be no touch, even the week. Saw this? You saw this too?
Huh? Yeah.
Yeah. So, cause the bar, there's still a gap between. If you check in on like the January, February, and March. Right now it's March, right? Oh no,
Yeah. Oh,
February,
April.
March, and April. You saw there is still a little bit gap there
Between.
between February and also the April. So what I'm thinking is like they're trying to close the gap. That's what.
Oh.
Hi Noah.
Sup?
So
Trying to like
close the gap.
go
So
close the gap. So go back
yeah,
up to that point.
yeah. That's why I have this line. We're looking at the monthly chart. So I was just showing Alan where is my final target,
Mhm.
and then let's go back to daily chart. You see this 3 bull line, candlestick. These 3 are so strong. The first bar even like it's like an outside bar. It's even an outside bar. This bar is so huge that it will include this 2 bar, the previous 2 bar. So which means it will be go a little bit further, and then yes, like it did, and then and and also look at this chart, like when look at the April 26th, this bar, when the price go down trying to close this gap, the daily gap, and it couldn't make it. Why? There is still a little bit more need to be filled, which means the buying power is so strong that they cannot even close the gap. So I was expecting the market will go up a little bit more or even furthermore.
Um,
Yeah, and also this is my first target will be here, close the monthly gap, and then second target start the liquidity here. So this one,
mhm.
let me do this way, and also plus the sell liquidity, and plus there is like a barely like a equal high. So the liquidity like this, it will be like a usually will be taken before they make a shift of before the market make a shift. Like they will took the liquidity first, and then they will like have a strong momentum up, have a strong sell, a little bit over this liquidity, and then it will firm and gap, which also means like a FVG, and then I will enter the trade like that.
So you're waiting for it to hit the liquidity, and then you're gonna
No,
enter a
that could
trade?
be your target, because you see, you still have a room here, like it's around 300 points. So
Oh.
yeah, so in this area, I will do do long. However, it's like but I saw there's a pullback, that there's one a daily pullback. If I change to 4 hours, so there's like this is a 4-hour chart. Even in the 4-hour chart, there's no pullback for this strong valid, and then it just like go back here. Let's measure it. See, it's exactly around the 0.5 0.5 here. So why I always emphasize the 0.5, the middle points, is so important. That's the reason. And then it's just another rally up. It go up really quick, and then here it slow down a little bit more, and then come down. Let's measure this one. Another 50 points. Another like a middle point pullback, and then still rally up, right? So in this way, I would say if I'm trading, I will I will looking for long, but not right now. I prefer like a little bit lower, when the price goes a little bit lower, so I can have a like a kind of like a discount, you know. And beside this middle range, if you open the 1-hour chart, for me this is more like a trading range. I already marked it out. You may see that. This
Yeah.
is more like a trading range, so I will prefer to buy at the bottom of the trading range instead of on the top. And also it's a big trading range for me. It's like 200 points, so I will not risk that much. I will not risk my my point here. So yeah, that's my my clue. And then I'm just keep looking, and then I saw yeah, for now we are not building a higher high. This is also the problem, because the bear, they're trying to sell at the top of the like near this level, because they don't want the bull to make a higher high. So if you make a higher high, which means this is a continuation of the bull trend, right? If the market stop making a higher high, which means it could be a chance to shift the market. You got it?
Trying to keep up. It's a little hard.
Am I too fast, or?
No. It's like,
Yeah. Do you have any question though? Noah?
Oh,
Yeah. Yeah. Either one of you. Yeah.
no.
What's your bias today? So
My bias is
it's
shorts.
short, right? Yeah, I saw you
Yeah.
short, because you see different people have different bias. So yeah, I can also short, but if I am short, I will short like on this top, like in this area.
Mhm.
I already
I
marked it
think
out like in this FVG, I think, like around here. Because you are shifting the 15 minutes chart. See, I found a FVG here, and then the first time when the price touched this area, have a strong rejection, and then it just go down straightly. So this
yeah.
is also a really good momentum for the beer. So
Yeah. If it goes above that last swing high,
yeah,
probably wouldn't be short bias anymore.
uh,
It really all depends to see if like
uh,
yeah, I'm short bias as long as the price is under that swing high, like that last swing.
yeah. So a lot of people will put the stop over here, right?
Yeah, that's the safest stop.
Yeah, that's also where that's also the target, the liquidity. That's the bull target. They're trying to
That is true.
yeah, that's the bull. They're trying to reach this target to take the sell side liquidity. I can also mark
Mm.
this out as the sell side liquidity.
Mhm.
So liquidity here. So
So
when the liquidity was taken, um, that's the job of this wave. The, that would be this the,
then
this this type of wave. They're targeting at this like for this liquidity over here, and then just pull back. They're trying first time. They're probably trying the second time or the third time to take the liquidity. Or
Mhm.
if they can, if they're trying so many times and still cannot making a higher high, which means there we change the we probably going to change the direction. The market probably will going to change the direction, and then they will, instead of taking the sell
taking the
side
sell
liquidity,
side.
they will take the buy side liquidity.
Mhm.
That's first. If you shorting on the top, your first target could be this low. This is the buy side liquidity. That could be your first target. Your second target, buy side liquidity, and then your. But this is like kind of hard, but you can still say that's also, it could be your final target. Right here.
Yeah.
So that's the two case. For
Okay.
right now,
For right now,
for me, I would say just like a consolidation. Cause when I open the 1 hour chart, it's just in the range.
Yeah. It's in a range right now. Yeah.
Yeah. So when you're trading in the range, I hate the range, but this range is kind of big, so we can also swing like from the
Mhm.
top to the
To the
bottom,
bottom.
or
Yeah.
from the bottom to the top, or targeting the sell side liquidity. They're all works.
Yeah. Do you understand liquidity, Alan?
I think so.
Yeah. It's basically like
Where there's like sitting there, like people are waiting to buy, right?
um I'll show you like a visual example. Wait, was that the right one? So this is basically liquidity. So if you see the market like it's ranging, right? If it's like this, and then you all of a sudden like you see a breakout, right? It broke out of this area, to come down here. Hold on. Yeah, so basically like liquidity, there's resting liquidity under here. So after this has been swept, that means that, hold on. That means that there's more buyers probably that's able to push it back up. And then the next liquidity target would be right here. Why do buyers want to target here? It's because that there's a lot of like sellers probably right here resting. And you can only see this pattern with more context. So like I think if you know what FVGs are, like fair value gaps, like it'll probably look like this. And then there's like, you know the candle formation, right?
Yeah, I think I do.
Yeah, it's like three
Yeah.
candle formation.
Like a long middle.
Yeah, so you'll see this pattern a lot. Like if there's a long middle, that means that there's strong pressure. If it's a green long candle, then there's a lot of buy pressure. So like this would essentially be
Like a target kind of, right?
this would be like a good setup where there's a PD array, which is just like a FVG or anything like that, something that has good conviction and good orders that's set there to push price higher. And this would be like our liquidity. So if there's like liquidity that should be swept before going above this level, and it's already in that momentum, you can see a good chance that there's going to be a reaction around this area.
Okay.
You know, so like if we look on the 15-minute chart, you basically see that right here, right? There's liquidity right here, sweep ski, and then a fair value gap. And a fair value gap is basically like you see this long green candle, but then you put the rectangle at the previous candle high, and then the candle after is low. This is the low.
Okay.
And then this is the high of the previous candle. And so now you're left with this area right here. This long area.
Oh, and it hit that.
And it hit it like perfectly right in the middle. So now that you have this sweep, which is like resting buy orders, this is where sellers want to target. So if sellers want to target here, that means that they want to sell their contract for buyers to get into contracts to push price higher. Does that make sense?
Yeah.
Yeah.
Makes
Makes a little sense, right?
Yeah.
Makes a little sense. It's like the more visually, the more you see it, the more you'll recognize it. So like another example is right here. There's another fair value gap, this big green candle, and there's a space in between the candles before it and after it. This would be a fair value gap. So this is a good place where you can see buyers protect and push price higher. And so if you can see right here too, this was the high that it created, but then when price went back down, it literally swept that liquidity. It swept that high. Right? It didn't sweep this high.
So that bar you put on, that's where you say there's liquidity because it's
yes, because yeah, like if this is going to be protected, right, by buyers, and if buyers are gonna buy it back up, their first target would be this first swing high.
By target, what do you mean? Buyer
Target as in like, so there was a reason why this got pushed down, right?
Yeah,
it's because there's sellers up here.
Oh, okay.
You know what I mean? Like there's people that want to sell price, like push price down. That's why price went from here to down here. But then what do we have here? A fair value gap.
Yeah.
So that means that there's more buy pressure than there is sell pressure. So if there's going to be buyers in control, that those buyers that are in control, that is going to target this first high. And that's because that's where sellers stepped in the first place. You know what I mean? So it's like a buyer versus seller. Buyers are winning, sellers are protecting this area, but then now the next area that you want to see, buyers and
Buyers
sellers.
protecting.
Huh?
Buyer protect.
Yeah, the buyers are protecting this area, but that's not always going to be the case. Like you can expect it to, of course, like be protected by buyers, but then anything can happen, right? Yeah. So that's basically how liquidity works. Is like if there's going to be buyers in control, their next target, like the next area that they want to see price hit, is probably going to be the swing high.
Okay.
And then their next target would be this swing high. As long as buyers are in control, right? But then as you can see, after it swept this liquidity, this last swing high, sellers are continuing to protect this area. So that's why they push price down. And it even like filled this gap. So this is a good indication that, okay, now we want to see price go lower, right? So what's the next setup? You don't see any fair value gaps to get formed here. Oh, except this one. There's a fair value gap right here. Right? There's this level. If you can see, like right here. That this is a good level, or like a good fair value gap where sellers held. Like you can see that price pushed up all the way up here, above it, but the candle didn't close above it. So if candle didn't close above it, that means that sellers still have a chance at like protecting this area. And then now you can see it. Now you can see price is able to push lower. And then now it's just choppy, 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 chop, and then this big ass candle, bro. Like this market will do this to you, especially like during the war, right? So when we see price come up all the way up here, sellers are still protecting this area. Remember when we visited here? Sellers still protected it. So now we're pushing price lower. Yeah, so that's it. If sellers are protecting this area right here, and we see price move lower, that also means that these swings high. This was the previous swing high. This was the previous swing high. It swept these highs, and that just means like, okay, there's a lot of sell orders up here. So that's really how that's how price moves. So like you'll see that in all time frames, and the bigger the time frame, the larger the time frame, the better that you can see how price moves on a bigger time frame. You can predict on the lower time frame, because you'll see the same pattern in all time frames, right? So like here's a good example. Like we're on the 1 hour. This is pretty much like it's like a middle time frame. Like it's high. It's technically higher time frame, but it's more on the lower side of higher time frame, if that makes sense. There's a fair value gap right here. Right? So we could expect, okay, buyers might want to protect this area. If we zoom in onto the 15-minute, you can see that there's another fair value gap right here. So 15-minute, and this one's like the 1 hour fair value gap. Price came down and hit these areas. and then it literally, like, buyers stepped in and pushed the price back up. Boom. Well, blam. And so when you see that, you can probably see this start to push price higher, which it literally did. So like once it hit this these fair value gaps,
Mhm.
it starts to target this first high,
Mhm.
right? So when price is protected here by buyers, that's why you can see maybe it wants to hit this price target first. Because it's not always going to come up here and then hit this.
Oh. Oh, okay.
Yeah.
So that when it hits the first target, that just kind of. How does that help you? Does that help
helps
you like see that it's gonna hit that next target, or like this is the next target?
Yeah. So like, if you were to enter a trade right around here, right?
Mm.
Like, say that you entered a trade down here.
Mhm.
It's pretty unrealistic that you enter here because there's no like confirmation or entry trigger to get in on,
Mhm.
unless you have like really good confidence that's gonna hit. But if you got into a trade right around here or right around here,
Mhm.
then this would be like your safest target.
Oh, okay.
And that's only because like this is where sellers stepped in to push price down in the first place. That's how the market moves. It's literally like sweep liquidity. Okay, liquidity swept, hits a FVG or some type of block or rejection block, and then it'll go for the next liquidity.
Okay.
Reverse higher. And then you'll learn about like if price pushed down like really far, there has to be some type of rebalance of price. Because price can't just go down, $1 million without it being balanced by like buyers and sellers. So that's why this is essential to learn. Like you'll see price start to rebalance into areas where okay, it usually wants to rebalance into like the equilibrium, which is up here.
Mm-hmm.
So, okay, price could end up here, but then we have our closest target right here. It gives you more confidence that this trade is going to go up. As long as buyers protect this area, you can see that this target first could get hit.
I see.
Yeah, you'll see this like in all time frames. Like we've seen it on the 1 hour. This is where price rejected off. Like this was a 1 hour fair value gap, but then if you go closer here, there's a fair value gap right here, and it rejected off this fair value gap, and it pushed higher.
Oh.
Boom. And then you can see that there's liquidity down here. What did price do? It was choppy, and then it wants to come down, sweep these liquidities, and push price higher. Does that make sense?
Yeah.
Yeah.
Kind of like it's like a pattern.
Yeah, you'll recognize these patterns the more you look at the charts. But when it comes to like actually placing a trade, you have to know what your probability is overall, right? That's why we scale down to the 1 hour, or that's why we start with a higher time frame, because higher time frame trends are stronger than lower time frame trends. right? So say that if you were to see this, right? If you were to see this, a lot of, we call them retail traders. Retail traders are basically people who are not the big institutions like the banks, the ones that are manipulating the market. These are just like regular people like us.
Mhm.
If you see this pattern, you're gonna be like, oh, this shit's gonna go down. Like,
Oh,
so let's sell.
they're not
But
looking at
then,
the fair value.
yeah, this is them. They're looking at the market like this.
Oh.
They're not seeing the bigger picture, which is this. The bigger picture is the trend was down right here. And then
Which is
we see this. Do you see where the liquidity is sitting at? We have these liquidities right here. I hope this is making sense, by the way. Like I'm
it's
really
actually it's actually really helpful right now.
yeah.
I know
So
I
like,
sound a little confused, but I'm just trying to absorb this shit. You actually showed me.
Yeah, you'll see this pattern over and over and over again. Like now you have this setup, right? You hit the first target after this, like this, after it sweeps this first level, then you can be like, okay, this looks like the market wants to go up. It sweeps this liquidity, sweeps this liquidity. You see market coming down, but here, like, you don't want to be like, okay, the market is gonna go like all the way down here. Why? Because we have a fair value gap right here. We have this entire range, right? This entire range right here starting to get rebalanced. And so if we just watch and not play, so like it's really important to look at the higher time frame before you start like going in into a trade.
Yeah.
Right.
Very good explanation.
Well, shit, yeah, that was a master class. You actually just taught me so much in like 10 minutes, whatever.
Yeah. So like here too, like, okay, so like this is the 1 hour time frame, right? Since it's in this area, you can be like, okay, I want to look to take this long. I want to look for higher to see higher, right? So I want to place a trade, buy contracts to take this long so I can make money. Okay, this is the 1 hour. Zoom down to a lower time frame. This is what the 15-minute looks like. It's like the same thing, right? But except you know that you're in an area of buyers. Buyers want to see. Now you have this pattern on the 15-minute where it's like this, right? It's just chopping, and then it comes down here, sweeps this liquidity, and then you just want to watch the go up like that. It's like you just have to be a reactor of the market. You can't predict what the market's gonna do. So, that's where confirmation comes into play. Because when you see this, now you can be like, okay, it's reacting off this 1 hour. On the 15-minute, we swept this liquidity, and we're just like, we're breaking the structure. We're breaking the downward structure into an upward structure. So when you see this, you can zoom down to like a 5-minute. And then now you have these fair value gaps that you can play off of. And these are really good entry spots to like get into trades, right? So like if I were to get in on a trade right here, Let's see if I get tapped in. I don't. But like it's not going to hit your like order every single time. And I don't usually take trades off like the 5 minute. I usually take trades off the 1 minute or 2 minute. Right. So this was our 5 minute liquidity. And all I'm doing is like scaling down to like a lower time frame after seeing that we could possibly see higher on a higher time frame. You see here, there was a break of structure right here. And then we had this FVG, fair value gap, right here on the 1 minute. We have an FVG right here on the 1 minute also. So like, honestly, if I were to take this trade higher, it would probably be like right here. And then target the closest, right? It would be something like that. But yeah, this whole lesson was just to basically, how should I analyze the market and how can I zoom in to take trades? Right. Higher time frame, 1 hour, come back down to rebalance this entire range. And then zoom in to find the same exact pattern.
Okay.
Because I'm yeah. Yeah, there's many different strategies out there, but this is like the easiest way to read the market.
Wow, excellent.
It was kind of, yeah, that was really helpful actually. Being able to use the levels and the fair value gap to make this like, what do you call that? That's good. That's good. That's good.
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 Very good.
Honestly, London is moving a little slower than I thought. But it's not 12 yet. Once it hits 12, I think that's like real London open.
I would say like 2 o'clock. Like New York.
Oh, really?
New York time.
Oh, yeah.
New York time, 2 o'clock, which is like around
11, right? Here?
yeah 11. There's a unique bunch of indicator that can help you mark out the sections.
Yeah. I think I have I don't have the ICT one, but I have a different one.
Oh yeah.
I have my ICT on.
Alan, I recommend you go to your indicators and then type in FVG and then use that first one by FVG Sam. I think.
Okay. Oh shit.
Yeah, it'll mark out the FVGs. I think on all time frames too. Like if you were to go in on 15 minute, it'll show you.
Oh, it does.
Yeah. So like that's a good way to like train your eye. And then like when you see those FVGs, you want to see like, okay, did price tap in there or did it like, it'll disappear when it inverses. And inverses, you know what inverse is, right? Or no?
Goes back.
Yeah. It basically like fills that entire gap. And then that, we call that inverse. And then when it inverses that gap, it just becomes an FVG. Like it's like how you normally use a FVG because
Wait. What?
here, are
Say
you
again?
looking at?
I wasn't looking at your stream. I didn't see you doing stuff. Do it again.
You're good. You're good. Where's a good example? Oh shoot. Where can I find a good example? I think right here. No. Yeah, right here. I guess this is a good one. Okay, so this is a FVG, right? Right here. But then when you extend it to the right, it fills it. So instead of this being a bullish FVG, this is now a bearish FVG.
That one?
Yeah,
oh.
the same block.
So that level still matters.
Yeah, it still matters, but if it gets tapped into like one time, and that's like the first tap into is like always going to be the reaction that matters the most.
So that level that it hit right there. Right there. Yeah.
And so when it hit this area, it literally like, okay, we've seen this area before. It went down.
But it would switch to a bearish.
Yeah.
Yeah, we
That's
can
what it looks
also
like.
call that IFVG.
Yeah, IFVG, inverse fair value gap. That's what it stands for. Yes, sir. That's yeah. So IFVGs are really important when it comes to direction, because when you think that this is bullish, but then it inverses it, it's a good indicator that the other side is in control. Especially when it breaks the structure. And breaking structure just means like we just rip through the previous swing low, or like the previous swings low. Like multiple of them. Oh, look at that. It went up.
I was gonna say market kind of moving.
Wait. I think I would have entered here. Yeah, I would have actually entered right there.
Like short?
Yeah, I would have entered shorts.
Short where? Right here?
Yeah, ish.
Oh, I see why.
But if it doesn't work, then no. This is like a completely different strategy that I do.
Oh.
What I'm used to. But this is the strategy that made me win my trade earlier.
The one that you just explained to me, or the one that you're trying to do right now?
No, the one that I sent in our group chat.
Shit, I have to go put my laundry in the dryer. I'll be back.
Right.
How many
Yeah,
points?
let's see.
34 points.
34 points.
Yeah, if you short here, I mean the high of this candlestick, that would be like 34 points risk, 36.
Yeah, I think like with this strategy that I'm doing right now, it's like really precise levels. So if it's like the protected highs aren't really where you want to put your stops. It's more like, I guess it's more like hoping it's not like hoping that
Okay.
it works out, but really like first you really want to run of it, and as soon as we see like a red candle, then you can bring your stop closer. But I don't know. I don't know if this is gonna play out because of how bullish we are. But if we look left, we're in like a big fair value gap area. Like we are, how many points are we in right now?
60, 70, around there.
Oh, there you go. Yeah, we're 35 points up in this trade. But I think I would have taken profits here now, since we're in a fair value gap.
I would say that the new FVG could be a try to short that it just firm in the 1 minute chart.
Yeah, I see that too.
Because
Yeah.
for me, I was not doing long, even though there is like a really big bull bar like this, but still it's on the top of the trending range. I prefer to sell instead of buy, unless it's the real breakout. It break out successfully, then which means I'm wrong. But I will still wait. Because I will still call it the bull trend. I want to see the change of the structure, like the chop.
Yeah. I didn't take this trade, but I think this is what my trade would look like. I shouldn't say think. I should say I know that this is what my trade should look like. There's like a lot of trading gurus that I used to follow.
Hello? Hello?
And what's up?
Okay, get back. 100 is not done. What happened? It went down? Did you do it?
Yeah. Look here. You watching?
Yeah.
There's just a whole bunch of FEGs. Like you can combine all of these FEGs into one. Just delete this one too. You see what I see?
Oh, yeah.
Yeah.
Oh,
So
okay.
Yeah, this is what I see. So like if you see here too, like this swept this liquidity already, and we tapped into this this fair value gap. But the level that kind of tracks the most is like the 50% mark of these boxes. like fair value gaps. Like that's
how come you're on the 2 minute?
It kind of just, I mean, on the 2 minute, these are like the fair value gaps that I have on the 2 minute. Like 1, 2, 3. I'm using the indicator that I told you.
Yeah.
But then when you see like a series of down close candles like this, or up close, like you can see green too, you can combine them into one fair value gap. Because if you see on like the 5 minute, it's probably the same thing. Like you get two fair value gaps, but they're all down close. So yeah, that 50% mark is like really important. And yeah, we swept this liquidity before and had this fair value gap, or yeah, this fair value gap, but then it didn't hit that 50% mark. That's why you see like another reaction when it hit that 50%. Right? So now that we hit that 50%, we also have like this resting liquidity down here. And this is like, this low-key like range trading, but yeah. You can see that we also have another fair value gap right here, bullish. And that's why you can see price kind of like resisting towards these sellers.
Oh.
You know what I mean?
Like, yeah, I know what you mean.
Yeah, like I want to see price come down here. Like all the way here, but price hasn't hit it yet. And that's why you can see like this fair value gap holding for these buyers. And like price is kind of pushing up. And then you can manage your trade however you want, right? So like it already moved. This already moved like 35 points. You can just go to break even and then like make it a risk-free trade. And that means like you wouldn't lose any money. You either don't lose any money or you make money. I just changed it. Oh my gosh.
Why'd you change it so fast? What the hell?
I had like a preset.
Oh.
Is this tough?
Yeah, I like it. It's better than my fucking purple. I should mark out my stuff.
I'll put myself on mute real quick.
See you, Calvin. I'm taking that same paper trade.
Hmm. Oh, you're copying me?
No, I have it set already.
Oh, you already said it?
Yeah.
You're in long or short?
Long and it failed.
Long?
Yeah.
Where is your entry though?
My entry was like 1 minute ago.
1 minute ago?
Yeah, it was on the fair. It was on the.
The gap? The fair value gap?
Yeah. Yeah. I just wanted to try it.
Yeah, you can
Okay.
try. You can try.
Yeah.
You can try. You say you're long, right? Yeah, if
Yeah.
I were you, if I want to long, I will long here, cause that will narrow my loss. Cause I
True.
will long here. There's a gap here, right? Notice that. So in that
Hmm.
way, let's say by here, my target will be this equal high. You see the equal high here.
Mm.
And then my stop loss I will say like here, the swing low, cause
How do you set the buy price to like hit something and
yeah,
then it'll get
it
an
just
order?
take profit. This means take profit, and then this means like stop loss.
Uh,
Is that your
I mean,
question
like, how do
or?
you? No, it's like how do you start an order? Like you want it to start somewhere.
You just like right click and then you say buy or long. Right click and then you say let's say buy, and then it will leave.
Mm.
Here you just move it around, move to your
Oh, I have to move
here.
it. Oh,
Yeah,
okay.
then you can just find your area and then you say buy, and then set up your target, set up your stop loss, and then click the buy like that.
Oh,
Yeah,
okay.
if I'm trying to buy, I will buy here because in this area I can take it, I can look at it as a trading range, the low of the range, and then sell it on the top of the range. See, if I buy here, let's see what is going on there. And then my target could be like at this FVG, you know,
Oh,
like
okay.
right here, because I know there's a strong seller there. I would say my target was set up here. This could be your first target. You can set it here, right below this FVG.
Oh, right below that.
Yeah, then your first target, and your second target could be like the equal high. You saw the equal
Oh,
high on the top. See, if you're entering here. But I would like to see, what I would like to see is like I want see the price went up, take the high again, and then I will go ahead and short.
oh. Is that more confirmation for you?
Uh,
Is your bias like shorts?
uh, oh yeah, let me ask you a question, Alan.
Mm,
So,
mm,
uh, what are we doing right now? We are trading, right? So what is
mm,
trading? Trading is just like buy and sell, right?
mm.
So what's your job as a trader? Like you take your order, you fill your order, and then you manage your order, right?
Hmm.
Yeah. So how do you? So when you trade as a trader, what do you think? Or what do you need to think at the first place when you enter the trade? You need you need to set your target, right? Firstly is your entry. Firstly entry. first enter the trade, and second is what? You need to calculate your risk and reward, right?
Mm-hmm.
Yeah, risk and reward. Risk and reward.
Is it that equation you told me last time?
No, I'm just like trying to explain the basic things. Because as a trader, firstly you need to enter the trade. If you don't trade, you don't like get nothing, right? You don't lose nothing, you don't get nothing, right? So the first step was going to enter the trade, right? Yeah, and the FVG, whatever the concept is helping to get in the trade, right? Why this helping you get in the trade? Because in this way, I use the FVG, I use your target, I use the stop loss. That way I can control my loss. I can control myself, right? So in that way I can manage it. I can do the management. Yeah, right? So when the market it's not going the way I like it, I can just stop loss. I admit it. Oh, I was wrong this time. Blah blah blah, whatever. And then when the target, when your target fail, when you get your profit, oh yeah, you're wrong this time. You're right this time. So you just keep contract, and then see the pattern, see the reason why you're looking for the reason why you're winning this trade, why you're losing this trade, right? And then you took, is more like your samples, and then you probably need like a lot of samples, like 100 trades, and then you get what? Conclusion. Conclusion of what? Your strategy works. Strategy. Right? So all of the knowledge is just helping you do those three things. First, enter the trade. Second, manage your risk, and then third, manage your reward. Right? All the knowledge. That's as a trader. That's why you are trading, right? You want to win money. You don't want to lose money. So every time when I enter the trade, I was think about it. How much I want to lose. How much I could lose. How much I want to win. Right? So you don't want. You're not like enter any kind of the. You're not enter any kind of the FVG. Let's say this is an FVG, right? This is a buy side FVG, very strong. Are you going to buy here? No, hell no. Why? It's on the top of the trading range. I said that before. I mentioned that before. So I'm not going to buy here, right? So your entry that's why you need to look the contact. So firstly, the contact is good. It's very important, right? So how do you look the contact? Now you are using the tool, different higher time frame, right? That's why we are looking the high time frame. We need the contacts. The contacts need to be valid, to make sense. You're taking the trend because because it makes sense, right? So I go into the high time frame to find a good contact for me, and then which makes sense, yeah. And then the second step, lower time frame. Why we're coming back zooming in the lower time frame? Because I don't want to lose too much. I don't want to risk a lot. Let me pull out another chart. So let's say 4 hours. Let's say this one. Let me delete all of this. Okay, let's say do the replay. Where's the replay here? Where are we?
This is January.
Oh shit. Live. Oh, where I am? I'm lost. Alright, never mind. Just look at the for 4 hours. Let's say I don't know the this part. So when this coming down and then coming up, right? So let's say, what are you gonna do? You're gonna do long or short? Let's say you're gonna do long. Let's say I'm going to do long because this is very strong trend, right? So if you long here, okay. If you long here, I need to let's do paper trade. Okay, if I long here, where you should put your stop? Your stop should be here, and then your target will be here. Does it make sense? No, it makes no sense, because you don't want to risk like a 8,000 over 8,000 just for 5,000. So that's why I do want to long here, but how do I manage my trade? I narrow down to 1 hour. Oh, I see, there is a pattern. I can narrow down here. I'll say just one candlestick, just right on the low of this candlestick, right? I buy here. So see how I narrow my loss? Now it's 4,000. It's not 8,500. But this is still too much for me, because 4,000 is a lot. And then I narrow down to 15 minutes. Oh yeah, there's another gap. There we go. I can put right below this candlestick, right? Now how much is the risk? 2,600. And then what's your reward? Now this time it works, because this ratio is good. It's around like a 1 to 2. Yeah, exactly 1 to 2, right? So why I start from the higher time frame? Why I narrow down to the lower time frame? I'm just want to get a better entry. Which means a better entry, reasonable risk and reasonable reward. So I always start from the high time frame, because you're a trader. So before you take a trade, you need to figure out how much you lose, or how much you want to you could lose, or how much you want to make, right? Just like a basic thing as a trader. And then you will start like look in the chart, like read the chart like other language. There are a lot of information in the chart. Now I will learn like this is a trade, the market, how many things the market can do. It could do the trend, it could do the breakout, or it could do the training range. So now here is my strategy. When is a trend, how do I trade in the trend? When the market is in the trading range, how do I trade in the trading range? Right? When is a breakout, how do I trade the breakout? It's that simple. It makes sense.
Mm.
Yeah. So every time you trade, before you enter a trade, just think about it. Where should I enter? And where do I put my loss, my stop loss? Let's say I short here, for example, just for example, I want short here. Say sell. Where is the reasonable loss? You tell me now.
For sell,
Yeah.
reasonable loss at the top of the trading range.
Which one? Here, or here, or here?
There.
There, here,
Yeah, right here. Yeah, yeah, at the top of the trading range, not at the.
here.
Yeah.
Okay. Stop loss. Okay. And then this is 5-minute chart, right? And then 1-minute chart here. All right. Oh, sorry. Yeah. Here is okay. It's an okay and stop loss, but it's not like a. Yeah, you can definitely put it here, but just like higher probability you will be sweep out because
So
why
above.
why I let me tell you why, because let's say the bull want to break out the trading range, right? So what they will do, what do you call a bull trend? What's the definition of the bull trend?
Higher, higher high, higher low, higher high,
Yeah.
low. Oh.
Higher high, higher low, higher high. Now you see lower low,
Oh.
lower low. That's that's kind of information the market is trying to tell you. Oh, now we are what? Now I can say we are not in the bull trend, but before this candlestick stop below this low, can you see? Are you able to say we are in the short? We are in the bearish. We are in the bearish. No, because higher high, higher low. That's simple. So when the both when you define, we are now no longer in the bull trend. So what you don't want to see, you don't want to see higher high. Yes or no? Because if it's going to make a higher high, which means trend resumption. I don't want to see the trend resumption because I'm on short. And why I'm on short? Because I think this is the highest point they can reach. They are not able to make a higher high to make to continue the trend. So that's why I enter here. That's why I put my stop there. Reasonable, huh? Does that make sense? Because if the market is making higher high, which means I'm wrong, then I will take loss and then exit the trade, right?
That's if you're going for a short. That's what you mean?
Yeah, because when I let me explain again, right? So you know this is a bull trend, right?
Yeah.
So how do you know? How do you know the bull trend is ended or not?
If
I will say
the low gets taken.
it could be one of the signal. Firstly, lower low firm, right? Lower low firm. What's the next target for the bear? Lower high. Am I right?
So
When I when the bear is going to take the control of the market. So what they are going to do? They're trying to make a what? Make a bear
lower.
trend. So if they're not able to make a lower low, they're not able to make a lower high, which means they failed. Which means I'm also failed because I want to follow the trend. I'm trying to I see the market is trying to shift from the bull to the bear. Right? I saw why I'm seeing that because this low was taken. So I saw they're trying. At least they're trying. I don't know if they're going to make it or not. So I will join them. So what's the condition? You join them. Then the condition, which means stop loss. Because you are not like always right. You could be wrong, or the market could be going up. So when are you going to admit, oh, all right, I'm wrong? When they're making higher high. So that case, I'm wrong, right? Because I don't want higher high because the bull trend, in a bear trend, higher high could not exist. Now exists, which means okay, I'm wrong. Did you follow me? Like this is right now is a breakout here, and then what they are trying to do, they're preventing. They will prevent the bull to make a higher high. They will make a how they prevent the bull to make a higher high. They will create the FVG right below this high. So there will be a lot of sell pressure. This is also where I entered. But sometimes you could be wrong because this low you can see it could be the minor low. This could be the major low. So that's why I always say your age is like for most of the time it's like a 50-50 because both bear and bull they could win money in the market. Because when it's just like a one side trade, let's say the market's going like this, do you think you are going to buy? You don't see the front. You only see the from this candlestick, okay, from this to this. Are you going to buy in this trade? No, I don't want to buy in this trade because I saw the selling pressure is so strong. I don't want to buy, right? This is just like a one side trade. You don't buy at all. And then after this, I saw reverse. This high will be like if you look in the term, they will say like high 1, high 2, which means like it's a signal for you to buy. The first bar, like in the high, could be the high 1, and then a lot of people will buy the high 1 because they're taking the chance. Okay, but lower probability for them because the first reverse always fail. But the risk reward is good because they're taking the low probability, so they should targeting like have a better reward. Otherwise, your system is not good because like the equation I mentioned before, the probability, if you always take the low probability, you're gonna lose for most of the time. So the time that you win, you need to target a big profit. Otherwise, you cannot cover your loss for so many times. That's the importance of the trader's equation. So for me, what I'm trying to do, I always want to catch the low of the wave and then sell on the top of the wave. So I was trying to give me the big picture in the 4-hour and then narrow down, give more like a precisely entry and enter and then exit. So I was always, what I'm trying to do, I always trying to minor my risk and then help me to get in the target. It just buys and sells. Don't think like too complicated, bro. It just buys and sells. Either the buys win, either the sells win. All the probabilities. All you need to do is manage your risk. Manage your risk, which is very important. Because if you don't manage your risk, you're gonna blow your account. Like blow so many accounts. That's what I usually do. So I always trying to manage my risk. How do I manage my risk? I use the FVG to find a better entry. I use the reasonable loss to help me to win. Because if you, let's say you sell here, you put your, you sell here, you put your, you want target here, you want to put your stop loss here. That works. Yeah, it could be worse. It could be work, but what's the probability for you to win? It's pretty low. You don't want to risk that much. You don't want to risk like a 900. You don't want to risk 1,000 here, and then you just don't take the trade. Your stop loss should be reasonable.
Okay.
And also your target should be reasonable. Why I'm targeting here? Why I'm not like targeting all the way down there? Because I know I got like a really low probability to take the profit. So why I'm not like just setting my confidence points at the first place? Yeah, that's how you manage your trade. Did that make sense?
Mm-hmm. Yeah, trying to keep up, but I kind of get what you're saying. It's like you don't want to
Yeah, I always
risk
trade.
too much.
Yeah, I always trade in condition. I always trade in condition. So under this condition, then I will take the trade. And then if there's something like something happen like without expectation, and then which means I'm wrong at this time. But does that means like you're a bad trader or you're useless or what? No. Because trading is a long time game. You need to keep doing this and then make your trader's equation positive. They're all probabilities. Just use your take the advantage of your age and then do those things you can do. You just do the thing you can do, and then don't expect to like oh, my target is all the way down there, I want to be rich, I want to have like 1,000 points. No, you're not. you are going to blow your account. You are going to lose your profit. Let's say you short here, and then you got profit, and then you don't want, and then oh, my target is way more than there. I want way more than this. As long as your target is reasonable, you can wait, but make sure your target, your stop loss should make sense. Yeah, trying to enter the trade and then use the way that we teach you to enter the trade, and then find a good target or good position to put your stop loss and then your target price, and then just trying to do that, and then you will get. Just ignore the strategy, ignore anything, just trying to find a good entry for you, and then good stop for you, and good target for you. That's it.
Yeah. I mean, I feel like, Alan, you have a good idea of where like to enter now. And it all just comes down to, is my risk to reward, does it make sense?
Mm.
And like, you want to not react off of your emotion and be like, oh, you're uncomfortable with losing this much money. Because when you start trading, you're not really playing with your own money, if that makes sense. You shouldn't even think about the outcome when you trade. You should just focus on executing like good trades, and those good trades mean good risk to reward and a good reason why you want to short it or you want to long it.
Okay.
It's there's yeah, it'll come with time. Like, I know you're probably having like imposter syndrome
Yeah.
or something like that. I
Yeah.
don't know if you are, but if
So many
if you are,
informations.
yeah, if you are, don't worry, because you're learning a lot within a short period of time. And the fact that you have like me and Calvin to talk to about this, it's really good. So yeah, if you have like more, like if you have a question about, oh, should I enter here or should I not enter there? Ask it, bro, because it's gonna help.
I was a little overloaded. Feeling.
Yeah, I know. Yo, bro, you know what? Just try to trade, and then you will know. Trade first, and you will have so many questions like, why I'm losing this time? Where should I
Yeah.
put my stop loss? Where should I put my target? And then why I failed this time? You are finding, oh, when the market, when you at the end of the day you print out the your chart, and you will know, oh, this is this, so I should not do that. So next time find a better entry, and then you are trying to pick up the tool that we told you, and then use those tools to polish your strategy, or firm your to complete your strategy first, and then polish your strategy, and then make profit.
You have to lose.
To
You
learn.
have to lose. Like, you have to lose before you start like understanding this.
Yeah.
I
I'm too
think
loose to
that
learn.
clears up some of the things.
Share my screen.
Yeah,
Yeah.
go ahead.
Okay, I think I should share my screen. That should tell you guys what I see. Does
That's
this
a
look
big
okay to
screen.
you? Do you like how I put your guys' screen like here too?
Oh,
Yeah.
yeah.
This is Noah's area, this is Calvin area.
Oh, you have really good management.
It's still yellow and purple.
I don't know how to change it. I like this. It looks cool.
It does look cool.
But I have a
Oh, you have a
trade.
sell limit there.
Yeah, I was gonna see if it hit it.
Oh, dude, it literally hit to the tick. What's going on there?
But I put it there because there's a I put it on top of the fair value gap for better risk.
Mm-hmm.
Or whatever for
To
better
reward ratio,
value.
or like RR, we like to say.
I didn't hit it, that's fine. And then put the stop loss here because if there's a level there. Oh, that level's there. Why is that there? Did I put that there here?
I think both of those are synchronized, or am I tripping? I don't know. But yeah, you can put it like that last swing high. You know, the top of that highest candle.
Yeah?
Yeah,
Here.
yeah, yeah. It's a good stop loss. But like, pretend that you are in this trade right now because it did hit the middle of that fair value gap. Pretend that you are in this trade right now and you'd be up money right now.
I forgot where I put it. Yeah, it was like right here.
You can mark it out. Where take out the rectangle. It should be where the T is. Yeah. Oh wait, no, I'm tripping. The one above it. Yeah. Rectangle. Mm-hmm. And then on the left side, it's more on the left side.
See?
Yeah. You had it. But then scroll to the left. Yeah. And then there's like that gap.
Right here?
I can't
Gaps.
really see. But like that fair value gap that you had, it's there somewhere. It's right there. Yeah.
Yeah, it's like right here.
There, bro. I don't know why it's not marking it out. Oh,
Oh.
See,
but your stop,
remember what I
your
say?
stop is at the top. Remember that your stop is at the top.
I think that the top should be taken because the equal high.
Yeah, there's equal highs at the top.
Remember what I say? If I want to sell, I will wait the price go up and then take the equal high, and then when I see the structure, that's when I want to trade.
So when you see it hit this high,
Yeah, check the liquidity first, and then and then I want to see a strong reverse after the liquidity was taken, and then
oh, you want to go down after
Yeah.
you hit this?
Yeah,
Okay.
it probably go up a little bit more, and then
Like right here,
finally-
maybe?
yeah, finally find some kind of the resistance, and then it just like drop down really fast, and then even firm and for fair value gap, and then that's where I want to enter the short.
Then what levels are you looking for?
Hmm?
What target level are you looking for when you're trading?
All
We're
the
looking
way.
at
My first target will be the midnight open. Remember those very important level that I told you guys before, like the Asian high, Asian low, midnight open, and New York the what I say? Europe high, Europe low. Those are very important level. But right now we are in the Europe section, yeah, which means London section. So I will not say which is London high because you will never know before the section end. So what I will refer is the Asian high, Asian low, and midnight open.
Is it this one?
Yeah, you can mark it out. The midnight
Oh, did you
open.
mark out?
You
Yeah.
you need to mark out the time. The it should be UTC -4, the time zone. You are not in the New York time zone. You are now in the California time zone. Right?
I think I changed it to New York. This one? UTC 4?
Yeah,
And then
UTC
what
4.
time? Oh, 12. Oh, okay. Like that?
Yeah, I would say the high will be the equal high will probably eventually be taken, and then I will entry short if I saw my setup. Or the second way to trade, let's say it's not going to take an equal high. If the price goes down below this level, this IFVG, this IFVG, this is a very important IFVG because here is where a lot of people want to short, but the price just goes above it and then never hesitate. So I will say if the price is going down and even stop below this gap is also a fairly chance to take the trade. Here short, if I short here, my stop loss will be this high because I will not expect the price goes a little bit higher, but that's the low probability. The higher probability will be taking this high and then come back again. Now the Now it's a new high. I'm focused on 307, this level.
Oh shit. 307?
Yeah, around here. But right now you need to look at it pretty close because that's where the order you say 297. Where is the order block stock? Where is the order blocks? I need higher time frame. Yeah, before I entry any kind of trade, I want to check the higher time frame first. Wow, very strong buy in 5 minutes chart.
Wow.
Yeah, it's just going up straightly. Oh, there we go. 306. Let's see what is happening when it's touching the 306. Very strong buy. Where the bar close, eyes high. Are we going to have a reverse bar here? Oh,
Reverse bar is.
This is kind of like a buying climax, in my opinion. It's going straight up to take the new high, take the Asian high.
Oh, it is.
Yeah.
Damn.
It's going to take the Asian high. Oh, it is. Yeah, probably like a PDH, the period day.
PDH.
Which means the New York high. Period day high, it means. But this is like a buying climax, you know, in my opinion, because it's a bull trend. However, when the trade goes to the end, the power will go get less and less power, the buying power. However, in this case, it's like getting more power, even stronger, which means there is a buy climax. A lot of people want to buy, want to follow the trend. What usually happens, like after the buy climax, will the sell climax will following up. So now this is like a really decent. I want to see how the bar close, and if it's like close above it's low, close below the low, or near the low, I'll say that will be a low one entry. Yeah, right now it's like a low one entry, but for me I want to see like more information. But a lot of people, a lot of trader would short here, and also is a reasonable short.
Yeah, we went higher.
Yeah, because why is the reasonable short? Because it's not taking the Asian high, which means the seller don't want see a higher high, because the Asian high is a major high. I will say that as a major, the major high.
Mm-hmm. That's also targets for buyers too.
Yeah, but I want to see more price action. I want to see like this is a good reverse bar, but how about the follow up? I need to see people following up. This is like it's okay. This is kind of like doji bar. You cannot tell any trend from the doji bar. So the market is like still deciding. So I will not enter. That's why I prefer not entering at the low one. Low one usually you get the lower probability, but like a higher risk ratio, higher risk reward. But which means but I usually take low too, which means I already see the market change. I saw the structure shift, and then I will enter the trade, even though I like I have lower risk reward, but I want what I trade in is like higher probability. I want to do like with higher probability. I don't want to to risk as the first place. Yeah, for right now, I don't know if the price is going up to take the Asian high or not.
It looks like it will.
Yeah, it looks like it will. See, that's why I don't take the low one entry.
Yeah. So
Low one entry. What is that mean?
this is what it is. Alan, this is a good example to look at the higher time frame. I mean, like on the lower time frame, it shows that it's going higher, but like so each 15-minute candle, like one candle equals 15 1-minute candles. So like all this right here, this right here represents one 15-minute candle. This is the price action that's within that one 15-minute candle. So like if you go to a 15-minute, this is obviously like a very bullish sign that price may want to take out Asia, which is basically there. It's like right there. And even like go for these like this other major high, which happened last Wednesday. So like whatever price reversed sometime in the future will revisit the prices in the past. And so that's why you look at a higher time frame.
Oh, that's what you mean by
Yeah. this all happened in like 1, 2, 3, 4 days. And then this too. All happened within like 4 days. Ish. We're also just trending higher. Yeah. Wait.
Yo, guys, I'm about to enter the trade.
For longs?
Short.
Oh, short. Yeah, it's nice. This is a nice market structure.
I want to see my setup first. I want to see how the bar closed. I mean, oh, unfortunately, close the gap.
Yeah. It closed the gap, but it didn't
what I'm
change.
thinking is like this level is like IFVG. That's why
Oh.
I entry. Okay, I will stop up.
Damn.
Oh, did you get into the trade?
Yeah, he did.
Oh, you did? Yeah. I think it took it took Asia high. This is Asia session.
Now I'm looking for another good setup.
Since it took Asia high, a setup could form here. Because I think that's the liquidity sweep that you needed. But if not, then we could just see this like probably do this. Boom. Boom. Just like trend higher and higher and higher. But we'll see. We have all this liquidity too. This is a whole lot of liquidity that has never gotten swamped.
How do you pull up that bar that you've been pulling up? Like shows you how long shit has been, or whatever, like measurement thing.
So if you hold the
Fun
shift,
ruler.
hold shift, and then just left click anywhere.
Oh.
Yeah. So Alan, you see this here on the remember on the 1 hour we tapped into this fair value gap.
Yeah. Hello?
You see my fair value gaps.
Mm-hmm.
So like this is the 1 hour. This first fair value gap that I rejected off of.
Mm-hmm.
It took out this liquidity right here. And then we see that price tried to reach the highs here, but it didn't. It failed. So when it failed, it came back down. But then we also had this fair value gap right here.
Mm-hmm.
Price then retested that fair value gap. Buyers are in control. And now their next target is the next high right here. Or their most confident target, their closest target actually technically, is this high right here. But since like previously this retest on this fair value gap almost took out the top here,
Mm-hmm.
it makes these equal highs. And equal highs are basically like when price tried to take out liquidity but failed. So it didn't quite yet take out liquidity.
Explain that again.
So like you see like when we hit this fair value gap, we tried taking out, like we came up here.
Yeah.
And this is the highest swing high previously.
Uh-huh.
This was buyer's target, like ultimate target, but it failed.
Mm-hmm.
It failed to take it out. So when it failed right here, it created this new high, but it's lower than this high right here.
Mm-hmm.
It then retested a fair value gap. And then now we can see price going above this level high.
Mm-hmm.
And there's a very high chance that it takes out this other high too, because buyers are showing strength. And when buyers show strength continuously over and over and over again, it'll eventually take out the major high right here.
Mm.
But yeah, when price failed to take out the high here, it created equal highs. So this is like your next swing high, or your most recent swing high. So we have swing high number 1, and then swing high number 2.
Oh.
Right?
Mm-hmm.
Swing high number 1 never got taken. Swing high number 2. This is the last swing high.
Uh-huh.
And yeah, after we retest this this fair value gap,
Mm-hmm.
we can expect this to take out high 2 and then also high 1.
So that should go above this high, above the high, one high.
Yeah. Again, these are equal highs. Like you see this candle right now, but like before it was just like these two highs. But then on the lower time frame, this is what we've seen. So this was like the 1 hour fair value gap that I rejected off of.
Mm-hmm.
And then like if we just wait, we see price going up. It took out, or it's bound to take out this high, which it did. And like we're probably most likely gonna take out this high. That's the strength of equal highs. Equal highs is a strong draw on liquidity, which means which means that you can see price like it's a magnet. Equal highs or equal lows are basically magnets for price. So yeah.
So you think it's gonna stay in the area? You think it's gonna
I think this area right here, this was the last swing high, and this is the most recent swing high. This area is gonna get ran through.
Oh,
Yeah, from like here, like straight, like not straight, but like eventually get ran through. Yep. And then like even on a larger time frame, you have all this liquidity that has not got swept. You know what I mean? So like if these are equal highs, price is probably going to hit these highs on this bull trend.
oh God, okay.
It's okay, bro. Trading gets fun when you get when you understand it. Yeah. Yeah, like if you're looking for shorts, like you want to see price go down, you want to see some type of market structure, and that basically just means like, okay, like
Just nothing. It's just
yeah,
kind of
you
staying.
don't see much here. It's just trending higher. But market structure looks like what I showed you earlier. And that's like fuck, hold on. That's like if price looked like this. Like this is enough to be like, okay, I could look for shorts here. Because we broke structure. You know? So that just means like breaking structure just means like breaking the bull trend or like breaking the bear trend. Like vice versa, you know? So yeah. That's why when I think Calvin went in on shorts here, I think this is like where he went on shorts. Somewhere here. His stop was right there. And his take profit was like, I don't know, maybe like down here. It's because that there was a little bit of structure. You know, there's this, that, this,
Oh.
and then that. But like, you remember how I taught you inverse fair value gap? That's what it did. That's what this candle did. So if it inversed this gap, then okay, we have bearish signs that it wants to push price lower. But it didn't break this low. This is just my analysis, Calvin. Like this is kind of like
you're
probably
right,
why.
You're right. You're all right.
Yeah, this is probably why it was wrong. And this is a good example, Alan, of showing how like you can learn from your losses and not to really like, you know, just to be more aware of what to look out for. But after he went in on this trade right here, that's how he got stopped, right? It's because there was structure, but there wasn't enough structure.
Yeah, this is like
So
a
what?
left side transaction. You know, there is a lot of trader like trade left side or right side. So this is like left side, like I hop into the trade like earlier. I was like trying to like predict it's going to form a fair value gap and then break the low, but unfortunately not. This is also the disadvantage of the left side transaction. However, it give you like a higher risk reward. But the right side transaction trader, they prefer to see the structure first. So that's the difference.
Yeah, so this is another good example right here. Alan, like this is probably what we wanted to see off of this structure here, because this is a inverse fair value gap, right?
Yeah.
So pretend that there was an inverse fair value gap right here. So you see like the bears pushing price lower and it inverses this gap. You could expect price to retest back into that inverse. Like I said, like inverses also act like regular fair value gaps. They're important key levels. This would have been a good trade. And like this is what was given to Calvin. Oh man. This is what was given to Calvin, right? This is the structure that he was given. It inversed right here. And like after we seen this candle close and it didn't break this structure, our last hope would have been this gap right here.
To go to face down, to go back down.
Yeah, to come back down. But at the end of the day, like it didn't. Because this was probably why. It didn't break the structure. Yeah, like you would want to see this candle. You would want to see that candle look like, fuck man. Yeah. You would probably want to see this like close like this. Or like this.
Oh, that's why he was looking for it.
You know, like that means that the structure would finally look like that, which is what we get here.
Yeah.
Oh.
So it's the only problem is the candlestick of the 4 o'clock. The 4 o'clock candlestick does not go to the way that I want it, so it just reverse up. Yeah, if you can locate the 4 o'clock candlestick, and then if it's a bear bar like close below the previous low, that would be a perfect entry.
Oh.
4 o'clock 4 o'clock, yeah, that right there. If it's close below previous low, that would be a perfect entry.
Right here.
Yeah. And also, if it did, it will also create an fair value gap. Because you see the open of the, the open of the candlestick, right?
Yeah.
Yeah, the open of the candlestick is very low. There is a gap between the open of the 4 o'clock and then the close of a 3 o'clock 58 minute.
Yeah, so yeah, we just didn't get what we wanted right here. Yeah. So
there is an SMT right now on top.
Damn, really?
Yeah. If you look at the 1 minute chart, you will notice that.
Yeah, there is SMT. So this is okay, Alan, like in
What?
this case, like you want to pay attention
Yeah, this is where you want to
because
pay attention.
yeah, like do you notice a little bit of market structure happening?
Mm.
It's because this red candle right here
Mm.
is breaking some structure. It's breaking some bullish momentum.
Mm.
And so it's really like up to you to decide like how you want to see this structure. There's like people that want to see it break through this red candle or like this red candle or like this lowest last swing high.
Mm.
But as long as you see like the pattern that you want to see, right? So like you have this pattern. You have this pattern right now,
Oh.
but you want to see this pattern, right?
Mm-hmm. So you
Because
want?
when you see this pattern, you can probably expect to retest like somewhere around here and then see lower because we broke structure right here, or like we would break structure. But price right now is not doing so. Like it came down, but it's just chopping. It's just looking like this right now. I don't know what the next candles are going to be.
Even higher one.
Yeah, like look at this. It's kind of like this is probably getting a lot of people.
Yeah,
Oh.
it should be.
It's so yeah, it's so enticing to see because like you see like you see this red candle break structure right here. So people are like, "Oh, I would love to take, a trade up here or maybe like right here." Stops right there, but they didn't wait long enough to see more structure. Like you just need to see more structure to see more confirmation on where the direction is going. That's why it's important to be patient too. I think that's like one of the most important lessons or skills to have.
Oh, there's a news today? Yeah, it is.
What is it again? Like PMI or something?
Yeah, PMI.
What's PMI?
Oh, no, it is PMI.
Check the indicator I use, the news. So this,
Oh, what indicator do you use?
the indicator, it's called news.
News by 2 degrees? Yo.
You see,
Yo, that's game changing,
yeah,
actually.
yeah. So that way I can check the calendar easier. So usually I just like hide it, but when I want to trade, you need to keep this habit. When you want to trade, you check the news, so
Yo,
you
this is
will not
sick.
be like a fucked up,
Oh. Oh.
Now I'm high, and also you can like set up the news that you want. I only check
Yeah.
these two because I think only the important news matters.
What does the news do, like, to change your?
News is like like news is basically injecting volatility into the market.
How do you know when it's
When the impact is like high, aka like if it's red, or it's really like the red news that you want to be like, okay, there's red news or there's high impact news today. So you could expect a high volatility trading day.
oh
Yeah. So it's like it really just tells you like what to, or I don't know how to explain it. Like it tells you what to
oh
expect.
my god, there's a fucking fast spider. Yo, yo. I'm sorry. Gotta kill this motherfucker real quick.
Oh, this is raw though. I didn't even never knew about this.
Oh my god, there's a scary spider.
Oh, Alan, you can take the news as a catalyst.
Oh, okay. It's kind of like a.
Yeah,
Sorry,
it's
I'm
kind of
not
like that. So the price will go way, way more faster. So usually you see how long we've been waiting here for the target to be filled. But when the news there, it could be filled in like just second or few minutes.
Oh,
It just goes faster, which means they can do like a, yeah, it should be like done in an hour, but right now it just do in 10 minutes.
Mm-hmm.
oh shit.
Oh, look at that. Took out that major high.
Yeah.
Yeah. You remember how I told you about the equal highs?
Mm.
Yeah, that's what it did. Like it went for it. If you remember, like right here. Yeah, check it out. Very nice. Very nice. Very nice. Is this just gonna go? Oh, there's even red lines when it's gonna start.
Wait, what? Oh,
Oh, I'm talking about the news.
starts something. So when it hits that red line, it's gonna.
That's when news release.
Oh,
Yeah.
so there's no news yet.
Yeah, there's no news yet.
Oh, I thought.
It's
But there's,
usually
but there's someone
yeah,
scheduled it. Someone scheduled it.
it is scheduled. That's
Okay.
yeah, it's at 10 a.m. tomorrow, and these high impact newses they usually happen during New York Open or like the morning time. So that's why New York is so freaking volatile, and like everyone trades New York because that's just the session, bro. That's the OP session.
The fast spider on my wall.
Yo, kill it, bro.
I'm scared, bro. I'm half naked. What if it jumped on my body?
What if it bites your thing?
Yeah, bro. Yeah. I don't know what to do, bro. I'm tripping about it right now. Like, I'm like looking at the screen and looking at the spider. I'm like, I can't. Top and ready.
Alan, I recommend watching a video on like AMD, which means accumulation, manipulation, and distribution.
What did you say again? AMD.
Yeah.
Can you say the whole thing?
Accumulation, manipulation, and distribution.
Where the spider's gone, bro.
I can show you a visual really quick. It's like pretty easy to understand. Like that. Yeah. So basically like this is what accumulation is. It's like when you're trading in a range, you know, you don't really know where the market's going, but this is just like the market. It's in the name, accumulation, right? It's in the name. It's accumulating orders here.
Like,
For participants to be in the market. Right. So this is what accumulation is. The next one is M, which is manipulation. So you'll see like price either manipulate higher or lower. If it's gonna manipulate like higher, that means that this is what institutions make price go so that they could gather retail traders, aka us, to buy for longs so that they could flood the markets and push price lower like that. This is manipulation, or this is accumulation. This is manipulation, right?
explain accumulation again.
Accumulation is like just readying the market to manipulate. And the manipulation, the reason for that is for institutions to gather retail traders so that they have enough liquidity and aka like participants to push price lower so that they basically trap all of these retail traders to go long so that they could flood the market to push price lower and make money when the price goes down. Because institutions, we know that they're the ones that are moving the markets because they put millions and billions of dollars into trading, right? Retail traders, bro, is just us. Like we're playing with like $50, $100, $200. So if big institutions are causing price to move down this much, that means that they need a lot of people to participate to push price higher so that they have a better risk to reward to push price lower. It's just another concept.
Like, it doesn't really show everything. You have to look more.
Yeah, so like I could pull up an example somewhere. I guess here is good. I guess. So like we're accumulating here,
Mhm.
or like maybe like right here, right? Manipulation right here. And then distribution right here. So like this is like the market doesn't know where to go in the accumulation phase. But this is just like whatever, right? You don't want to trade in this range because what the fuck is this?
Mhm.
And then you see you know, like you also have this liquidity right here. So like if you're in this trading range and you see like that first breakout, which is this right here. If you see this like first breakout, there's a pretty good chance that like you still don't want to hop in on this trade because you don't know where really like price is gonna go. But when you have more context and look to your left and say, okay, there's resting liquidity right here. We're in a trading range here.
Mhm.
Then like you can say that this move right here was manipulation. This was like institutions letting retail traders come in after seeing this candle, or like even after seeing like this series of candles, or like maybe like right here, right? This last candle, bro, retail traders are enticed. They're like, oh, look at that. That's
There's a
they
breakout
want to
point.
push price lower, right? They want to be like, oh, let's get in on shorts. I'm
Oh,
sorry, it's like 1:40 a.m. I'm tweaking. But yeah, and then institutions come in and they're like, psych, we're gonna go this way. So and then after they go this way, what do you then see? You see price, like this is the distribution. Fuck. Fuck. This is the distribution right here.
Mm.
And then it just rebalances this range for a bigger move higher. Yink. Accumulation, manipulation. Yes, distribution here. Like you'll
Kinda
see
like,
this. Yeah.
they're kind of like state, like, uh,
Hmm?
nothing.
Oh.
Sorry.
Yo, bro. Right now is the distribution. If you explain,
Yeah.
yeah. See,
This is
Oh,
took the
this
high,
is all
took
distribution, bro.
took the low and then go straight up.
Yeah.
Accumulation.
Literally, bro. Look right here. This is you can say that this is like accumulation, right? It's just trending downward, but like we're not really making big moves.
hmm.
And then there's this freaking fat candle right here. This would be like our manipulation. But then our manipulation gets sent into a fair value gap.
Oh,
Like it's right here.
just like the other one.
Yeah. It manipulates into this fair value gap. They're like, oh, like retail traders like, whoa, like this is definitely gonna go lower. And then it rejects off this fair value gap. This was the manipulation move that the institution needed to see, you know, like I don't know, this entire move play out. It's kind of crazy though, because like, you know, this manipulation hit this fair value gap, and now we're just trending higher. But like, you can see this entire range. This is like a range. So there could be like,
You can also explain from the midnight.
midnight.
I mean, yeah, 12 o'clock.
Yeah, 12 o'clock.
Accumulation, and then took the low, the
Right here.
liquidity, and then yeah, that's the
Oh, that looks.
right.
Yeah, that makes. Wow, I didn't even see that shit. Yeah, but like accumulation, manipulation, and then like right here would be distribution. But then after distribution, you can just see like accumulation again, and then it could continue distributing. That's another thing too. So like it could go back accumulation, manipulation, distribution, accumulation, continue distributing. It could do that. And then like what he said with the midnight, this is the key level. This is a level when this is price opening at midnight. And key levels are important because they're strong. They're strong levels. And when price hits it, you can expect it to like bounce off with enough like context behind it. So like here in this case, like this is just strong ass like support. Like we don't want to go below midnight. So if it 1, 2, 3, 4, 5, 6 like tries to take it, we can just be like, okay, this is accumulation, and it's just gonna continue the distribution phase like that. I don't like purple. Why is it purple?
You can also say the 3 o'clock 10-minute is also a manipulation.
3 o'clock.
3 o'clock.
10.
Oh, it is.
3 o'clock 11-minute.
Yeah. Yeah.
It's also
Yeah.
accumulation first, and then manipulation took the low. You feel like it's breaking out, but actually it's not.
Yeah.
And then distribution
Like
to the top.
I had this trade. Yeah, I had this trade earlier, or I paper traded it basically. And like I basically caught the manipulation move. People can do that too. You can catch the manipulation move. And that's what I did.
Fuck, I need to put my laundry back. Give me 1 second. 1 second.
You're good. You already knew about the AMD concept, right, Calvin?
AMD?
Yeah.
What is AMD? I don't know.
Accumulation, manipulation, distribution.
Yeah.
Yeah.
Well, I think there's no chance to short tonight.
Yeah, I don't see it.
It's probably just go directly to the target I mentioned when we at the first place when I start the live. So the
What is
454 that I mentioned when I opened the live.
454 right here?
Yeah, that's the month's gap. They will try to close the month's
There's a
gap
month
first.
gap? There's a month gap? I don't even be looking at the month.
Yeah.
Well, I gotta be looking at that more.
Oh, you need to click the. You see the the BAGT. Yeah, click that one. There's a gap. Notice that? There's like 62 points
62 points.
between those two.
Right here?
Yeah, right here.
Oh.
It's trying to close the gap first. And also I will expect a really strong rejection there, because firstly is the close of the monthly gap, and also you can also code the order block of the bear trade in monthly chart. You know order block, right?
Mm-hmm.
Yeah, that's basically the order block.
Hmm.
Alan, I will also encourage you to click that button, because it's for adjust. It just adjust for the contract change, because every different month they will change the contract.
Okay. Yeah, so just keep it like this?
Yeah, because
Okay.
every time when they change the contract, the number could be different. The chart could be different.
I see.
Yeah, and then if you adjust to the chart, to the new chart, and then it will be more like a precisely.
Mm-hmm. That's interesting. I never even like thought about that gap. Yeah.
That's
I
why you
mean,
need always get more information. The more information you get, the more confident you are.
yeah. Fair value gap tapped on the monthly. And then even down here, tapped into this fair value gap and just set price higher.
Right?
And then on the daily, we just have all of this liquidity that's getting ready to get swept. So, but honestly, with war, I don't even know what to expect, bro.
I know. Just do the best.
Yeah, you just follow your trade, your all that still. And yeah, dude. Oh my gosh.
There is a pullback. I don't know how deep it will be.
Yeah, honestly, like if you want to see this go shorter, you're gonna have to like, you're really gonna have to see some type of displacement lower. Even on the 5 minute, you're probably gonna need to see this like get ran through.
Yeah, it's like a very all in long. It's all in long.
Yeah,
Always
it's
in long.
like, yeah, you can go long here and you can probably make a ton of money because this could just go higher and higher and higher.
Yeah.
I don't know.
I don't know. Probably the reverse gonna be happen at the New York time, New York session.
True. But like, what do we see on the higher time frame for New York coming out? I mean, freak, man. New York session's in like 5 hours, 4 hours. Um,
Yeah.
yeah, I don't know.
4 hours, probably 4.5 hours.
Mm-hmm. Yeah, I mean, we could see all this liquidity get swept
Yes.
before New York. At this like momentum, like we could just, I don't know. It's probably not gonna happen. That's just way too high. Um, but we'll see. I do want to attack these highs though. So if I'm going to trade tomorrow, I'd probably be looking for longs. If this comes down to retrace, I wanted to like hit this rejection wick,
Yeah.
then see this hold so that we can see higher. It already retested this fair value gap. On the 1 hour, maybe just like maybe retest this one too.
You remember the trading range that I mentioned before? Just do the major move in 1 hour, the in the middle. Yeah.
How do you do that again? Is it like this?
No. Yeah, just right in the middle, this section, you just double it up.
This one? It's like this?
Yeah, you can could just double up and then see where is the target. I usually do one times of the major move, or you can do 2 times, 3 times. Usually 1 times of the major move.
Damn, so yeah, this would be like the 1 times. Oh wait,
Yeah, a little bit. Yeah, right.
yeah, right there.
Yeah,
This would be the 1 times.
yeah, and also that's where the bull could close they can close the gap. The 1 time.
Yeah, right here too is just all this resting liquidity.
Yeah, all
It
this
aligns very.
equal high.
Yeah. Interesting. Yeah, dude, I need to learn that measure move because I know that that's gonna help a lot. So much to learn, man.
Take your time.
Oh yeah, for sure. Dude, that's so clean.
Yeah.
Like if this is like actually a really good new strat, like this could be a strategy, right? Like that 1 times measure move, just hit it off that 1 times. If it's aligning with like liquidity or some type of OTE level.
Yes, sure.
Ah man, I didn't even think about that.
Yeah,
On the
usually
4 hour.
when the especially for the training range, when it's being breakout, just double up and then you will see the target.
Yeah. Yeah, that's interesting. another YouTube video of a lot of learning. Like even for me. This is helping a lot of like my overall perspective of the market. It's beautiful.
It is.
Huh. 5-minute close inverse. Break of structure. Honestly, it tapped into that fair value gap, but 2-minute fair value gap is still holding.
For me, it's just like a CISD.
Which one? Right here?
Right now, yeah. Unless it's like break below this low and then also going lower. That's the break of the structure for me.
Yeah. Like this would, I mean, this is considered CISD also, but there's not enough structure, huh?
Yeah.
So like really the next CISD would be this one. Or this one. I would think this one. I can't tell if this is like accumulation. Manipulation. Then like even higher for distribution. But I don't know.
To the man's gap. Could be like 90 points. 90 points to the man's gap.
Oh, true. Yeah. Take longs here. Oh my god, that would be crazy. You could probably take longs here if it inverses.
Yeah. It's a good long. Feel like you could like
It's a little risky though, because you're so high already.
no, you can wait. You can wait the bar like the candlestick close above the FVG, and then
Yeah.
it will like affirm an IFVG, and then you can lower your risk to the minor low.
Yeah, because that's usually what happens with like trends. It just like it retraces back into a fair value gap. Confirmation would be like the IFVG. And just take it off the candle close, and then usually it just like explodes up still, continues
Yeah.
to explode. We'll see. I feel like that's what we're gonna get here. That's what happened here. Or here. Yeah, dude. When I first started trading, I was taking every single fair value gap.
Me too. Every beginners do.
Yeah. Alan's gonna go through that.
Yeah, but he will learn from that.
Mm-hmm. Yeah, I'm so proud. Dude, I hit like my biggest trade on an Express account, like the live funded account today. And it was during Asia session, bro. I never thought I would hit my biggest trade during Asia session.
Yeah, that's a good one because Asian session usually like you get less points.
Oh, look at that. Oh, it didn't inverse it. Oh my gosh. Shall I get inverse this one?
Yeah, you want to see the price close up. Yeah, it need to be close above
Mm-hmm.
the 384, and then
Mm-hmm.
yeah, you can say, oh yeah, if you are breakout strategy, you can like just enter there when the bar close. You just enter when the bar close, and then expecting like a little bit higher. Let's say you know the ABC structure, like the first leg and pull back the second leg. I would expect the second leg usually will be equal to the first leg. It was like, how many points was that? 51.
Mm-hmm.
Yeah, you see the leg over here, and then pull back. You call this A, the A wave, and then this is the B wave.
Yeah. I probably would have taken trade here.
And then C, you're expecting C will be equal to A. You can just move here to there. That could be your first target.
Or 13.
413. How many point was that?
26.
Yeah.
I don't know. I'm taking it off the close of this candle.
Yeah, you can do that.
This is
25.
just a 1-to-1.
Yeah, it's like more like a scalping, you know.
Yeah.
And then your stop loss, how many? Like
23. I have it at 23. 26 take profit. 23
yeah, it's like a 1-to-1, but you have a higher win rate.
yeah. Hopefully, I don't know. There's SMT holding it back. This is a paper trade though.
Okay, because a lot of people do the 1-to-1.
Yeah, I found a lot of success with 1-to-1.
Because a lot of successful trader, they're scalper. They're not like a swing trader. Because usually, like beginner like us, will do swing trade first because we don't have that high, that high of the win rate, and then it's just better for us to, when we have a lower probability, we need to looking for a higher risk reward. So that's why we always do swing instead of a scalp, unless you say, oh, you got like a over 80 or 90% of the win rate. Right now you can do scalp, you can do really quick, you can do the whole day.
Mm-hmm.
The really good trader, the big trader who win money, they're all scalp, bro. I'm not going to lie. So this institution, how many orders they have? They have a lot of orders, thousands, millions. How many they are looking for? Just one tick. They only need one tick, and then they just quit.
Mm-hmm.
They're all doing they're all doing the program trade,
Mm-hmm.
so they can keep their win rates like way above than us.
BlackRock. BlackRock is manipulating the market.
Do you know that
Yeah.
70% of the cash in the market are in control of the machine computers?
You said what?
70% of the cash in the market, they're under the control of the program.
Oh yeah. Like Citadel.
Yeah, they're just program trading.
Yeah, it's an algorithm, bro.
Yeah, it is an algorithm. So
It's
that's
literally an
why
algorithm.
that's why like 80% of the cash are in those computers' hands.
Mm-hmm. And they're all being ran under different companies, bro. That's
Bro,
crazy.
my laundry machine. Can y'all hear me?
Yeah.
Bro, my laundry machine sold me.
Wow.
Dude, it was stuck. I had to like unclog it or something. I like unstuck it.
Oh yeah, dude. Like
Oh,
you gotta clean out your washer and dryer. The dryer, you know how like it carries those lint nets? Alan? Aaron. Alright, well hopefully this trade hits.
there's not a good setup for me right now.
Yeah, honestly, like I probably wouldn't take this trade because of how high we are. But like if we were like down here still, I'd take it.
Yeah.
I would take it down here and then target this high. Like if it to happen, like I don't know.
Now it's trying to burn a bull flag.
Bull flag?
It's like a triangle.
Nice.
Right.
Well,
See this trend line always support, always resist the price.
yeah.
So usually the bull flag have two cases, either the trend resumption or this is we can call the final flag. The bull flag could be the final flag, and then we'll start shifting the market.
Nice.
See who is going to win.
Bulls are.
This will if let's predict the market, but don't predict market. I'm just like saying, and a case like let's say the bar close like the bear like break out really strong. Firstly, they break out the low of this low. They break out this low and even firm a fair value gap here. That's also a good way to sell.
We'll see. We'll see. Low key, I think I'm gonna go to sleep.
Yeah.
Pretty late.
Yeah. Pretty late. I've been straight for
pretty
like for hours. Let me see how many hours do I have right now. We start
3 hours
11.
maybe.
Yeah, 3
Hello?
hours. Oh my gosh.
Damn.
Okay, I gonna go.
Yeah, me too. Yeah.
Okay,
Yeah.
okay.
I don't know if I can get up on time.
Get up.
Yeah, I'm not trading in the morning.
Because the New York time, I love the New York time, New York session. You know, big move.
Yeah.
You can like close your day pretty fast. Just the fast day, I took perfect and ended end trade of the day. It was like 5 minutes. I remember, just 5 minutes,
Yeah.
5 bars. hit my target, and then I just left.
Yeah, man, you gotta love New York. But, all right, y'all.
Yeah,
Good night, guys.
best call of the day. Bye.
Yes, sir. Right back later this week.
Yeah, see you guys later.